All right, everybody. Hope you're having a great day out there. Welcome here to the Diagnostic Trading Hour. I'm your host, Daryl Martin, right here on TFNN.com. You can check us out live with commentary all throughout the day. And TFNN.com, you can go to Tiger TV. Also, you can see us live streaming right inside the eSignal platform, as well as on your mobile phone. You can get access to us just by going to TFNN.mobi. All right. Well, let's talk about where the market's going, what's going on today, and get on to checking out a potential Google trade setup. We got the markets are up right now. They flew down, massively down, and now flying massively up to some big volatile swings going on. We got the S&P right now is up 14.5. The Russell's up 20. Got Nasdaq up 16 with the Dow up 64 points. Copper currently is down almost 1%. We got gold and silver pretty flat on the day, just down about a 0.2% right now. We'll get on over at oil. Oil is flying on up, and being oil inventory day, it is definitely moving. It is up over $2 right now after it's been crashing. It decided to wake up and move up, and it's moving back up strong, up over 2.5%, almost 3% right now. We got natural gas down about 0.75% on the natural gas inventories. Corn is currently up a couple bucks. We got soybeans up $8. We'll get on over a pound dollar. It's up 60 pips. We got the euro pound down 49. Dollar franc is currently up 9 pips. We'll get at the dollar yen. Dollar yen is currently up just 10 pips on the day. We got the euro yen up 9 pips. Aussie yen is currently down 71 pips on the day. Aussie dollar is down 43. We got bonds down pretty strong after that massive run that we had. Like a 7 deviation move. It's impossible move to predict there, and moved down about 0.75%. We got the dollar index currently down about 0.5%. The euro dollar currently pretty flat on the day, down 1 pip right now. And that gets you caught up on your lunchtime market wrap. All right, so that'll get you there. We had some good trades yesterday, and we can go through and check some of those out real quick for you. And let me bring those on up. We'll look at them. We had the MVP shooting on up last night. Let me zoom that back. There we go. We had the MVP sort of pop up. We had a nice little, basically just a premium collection at best trade. Better trade was really the premium collection trade that happened right there at 11 o'clock for you. And just not near as much activity as we've seen lately. Looking on over at the euro yen, it just went up. A great premium collection trade. But really fired off earlier in the evening right about here. Moved on down, though. So could have got you on the stop depending upon what contract you were using. But again, not near as much movement as we've had recently in the evenings. Markets really woke up earlier today. And we'll see another nice little pop up. Then a pop on down on euro dollar. Got a nice down move around 11 o'clock. That trade worked out great, no matter we did out of the money or in the money. Going on CL on the oil there, we got some great profit poppers just going all morning long, just one after another. Just a really good setup. Nasdaq a little choppy, a little crazy, along with all the other indices, flying way down. And then flew way back up, came back down, going back up now, and just some big movements. We got gold, like I said, pretty flat on the day, pretty choppy overall. It did move down to about almost 0.6 deviations, came on back up to settlement, and pretty flat at the moment. Russell, very volatile, flew on down, then flew on back up all the way up to about 1 deviation level on the high there. It's a deviation and a half from the low move. So moved down half a deviation, then up at a deviation and a half. Had some nice moves, chilling out, right around 0.5 deviations. We got the DAX having a great Apex Elite move, just really giving a great trend, just getting destroyed. And as of early this morning, was down at 3 deviations. NASDAQ, really erased a lot of its losses, trying to get some of those back. And a little bit of, rebound this morning after jobless claims and some Fed comments that came on out. Euro dollar trying to make a little bit of a recovery, but still pretty flat on the day. Really there's not a massive, we still have the QE coming in October, or they're suggesting, Bullard is suggesting that they keep QE in October. I want to make sure I say that. So we'll see if they do, but so far it looks like that they're going to go ahead and still scale it down unless they change things. But there's just different Fed comments out there. I guess we'll see what happens. We got the dollar index chart, and there may have been an update I haven't seen yet. We got the dollar index chart, looking at that. And let me see here. Pull that on up for you. And dollar index running on up, but erasing some of those gains, starting to get hit a little bit more. and down half a deviation now. Really has moved a deviation from high to low on the day already. Moved up one deviation and then pulling on back down from that. And so hit a deviation to the upside and a deviation to the downside. So basically a 2 deviation move. You count both sides. We got the Aussie dollar rebounding right there and falling to 7-month lows, getting a little bit of a bounce on that. But really, I wouldn't call it a rebound just quite yet. But it's trying to really get something, moving and shaking. And let me pull that chart up for you. Here's a weekly. And we got, it sort of paused down, but it paused right there. I mean, if you look at that, that's just low since, March, April, May, June, something like that, about June of, earlier this year. But came on back down, made a little bit of new lows, and then started to bounce back up a little bit. We'll see if it's able to make a full recovery. If it is, and of course, we would be looking for it to move on back up. Haven't quite got a full turnaround on it yet. But if it does get that move, then we'd be looking for a move up to about 94.60 potentially on the way back up as a longer term, as a weekly chart. So, I mean, it could easily take a month before it gets there. Let's see, today's news. We got last night, let's pull up the euro-dollar chart for you. Let me get that going. We'll look at it. And one more second. I just got to find the right chart. Right template. And there we go. So let's go ahead and pop on over, look at the euro dollar. Now that we got the euro dollar on up there, see how it did. We had, like I said, our news plan. So let me pull that up, go into the news plan for the 16th and also for last night, and just look at what kind of moves that we got on it. And been a little bit hairy lately. So made some of this stuff a little bit more challenging than usual. But let's check it out and see what we got. We had an 11 p.m. to 7 a.m. And that one got a little bit rough because it just dropped like a rock again. And I know some people sort of, they're looking more at the straddles and strangles right now. However, this morning's one that we were looking at on the CAD manufacturing cells, we'll pull that up in a second, on industrial production. We had an 8 to 10 looking for about a 30-point move. Let's see, 30-tick move. Let's see what we got on that. And on that one, 8 to 10 o'clock. That one was a 4-pip move, so a nice flat move. Really looking for a max profit on that one. But the 11 p.m. to 7 a.m. was pretty rough. It did do at least a bounce on it, which did help out, but still was a big down move because you got that full deviation move from last night that happened in the overnight session. And that would have taken us from 2,300 right there to 7 a.m. right there. And so like an 80-pip move. So your stops would have been hit on that, but that's the beautiful thing about the stop plug. Helps take care of that. Looking on over at the dollar CAD, let me bring that one on up. And looking at the CAD manufacturing index here, 8 a.m. to 10 a.m. And so we went at 8. We went for a 10 a.m. And on that one, only 13 pips. We were looking on that trade for a move of 25 or less, and we got less, so that's good. So about a 50% profit goal on that trade. One other trade we had was Philly Fed Manufacturing. At the same time, had to have a little caution with the unemployment claims coming on out. But if I pull back up the euro dollar, usually a small move, but unemployment claims really rocked the markets in that process. But they were already going. If we look at that, the 9 to 11, let's see here. Let's check it out. 9 o'clock. And take that on over to 11 o'clock. And we got a move of about 35 pips. We were hoping for 25 pips, so about 10 pips beyond what we were wanting it to move. That will wrap up that. We'll go and check out the oil inventory report. Let me go ahead and pull that on up for you. We'll go ahead and grab CL and bring that on up there for you. Don't forget, if you are trading soybeans, they're in their process of rollover. If you're on Nadex, Nadex has rolled over to the January contract. And so make sure you go ahead and get that updated. Let's add in the expected ranges right over here and see how it's going. But as we know, it's been just flying the entire way. So let's look at that on the expected ranges, and it just it sort of took off and did not look back. And but as you can see, it came on back up and moved on back down. We really stayed within expected ranges during the release at 10:30, and which doesn't look big, but is pretty decent size. Now, this was not a normal oil inventory report. It did happen on a Thursday instead of a Wednesday. So, that impacts it a little bit, but I'm actually impressed with the oil inventory report, how it actually still stayed within the range. Let's look at how that report came on out. If we go on into oil inventory, pull that on up here to 11 o'clock, and look at the latest release. We go down here to the second paragraph. Average 7.7 million barrels, and let's see, what does that say? 7.7 million barrels last week, up by 28,000 from the week. Well, that's where they have 8.4 or 8.9 on here. Maybe they need to update their number. Unless there's something oh, no, I'm looking at the third paragraph. Sorry. All right, 8.9 million barrels from the previous week on oil inventories. So that was oil imports. So oil inventories, 8.9 million barrels up from the previous week. And that would theoretically be, hey, if you got more oil coming in, then it should go down, but it did not. That's why we don't trade the fundamentals directly. We trade the charts. And then going on in, looking a little bit further at 370 million barrels, that is in the upper half of the average range at this time, meaning that we are basically higher than we, have been at this time of year. And therefore oil inventories up. One would think that would mean price down, but with this just big technical move, came right down to that hard line 80, hit 79.80, right there, 0.7, bounced on up, and decided after the oil inventory was out, it shot down at first off of it, and got a little bit like just itty bitty move down, but then popped right back up, came on back down in the later hour, but just edging up all the way. And really had like a massive pop, touched the deviation line right here, just barely nicked it, and then came on back down to settle still within the expected range, and probably will settle within the expected close to close on the hour. That gets you caught up on oil inventory. Let's go ahead and look on over here, and let's see. Let's check out natural gas as well. That's a little bit more regular report. So looking at checking out the natural gas. And let's go ahead and I'll open up the chart for you on that one. And we got a spike tracker on that set to do a buy on there, right there on the report, which is when I really like to trade natural gas on these. And popped up, bought AM1, looking for an in-the-money binary as soon as that happens. And then it spiked down, almost hit its expected move, came on back up. I like that, broke the high, signaled the entry. And on the 5-minute spike, and got in and expired in the money. So got to love those simple spikes. And that's every Thursday. Again, I would look at this on Wednesday, but oil inventory is not on its regular day today. All right, y'all stay right there. We'll be back after this break. All right, folks, welcome back here to the Diagnostic Trading Hour. And so just checking some things out now, trying to figure out exactly the best plan that we can put into place. And let me get rid of a couple things here and bring up Google and all that stuff for you. And we'll be looking at that trade here in the bottom half of the hour. Let's see. So first thing I want to do before we walk fully into that, I talked about implied volatility yesterday and how it is extremely high right now. We were talking about the VIX, and I pulled up a VIX chart and was on Tommy O'Brien's show. We're going into it, how it popped up to 30. It's like up at 25 right now. And what that does, that really means everything goes to the middle. Binaries get more expensive. They get closer to 50. I talked about an example. Tommy talked about some examples of traders he knew where, like on, say, like a flash crash day or big move day, went short. Shorts were great. Had some calls on, figured they were worthless. Looked over at the calls, but the implied volatility had spiked so high that the calls were still profitable even during the flash crash. And there's a great example that often when we do the Google earnings trade, sometimes we'll see both sides up at the same time on a strangle. That's because implied volatility starts increasing on that market. And let's see, tomorrow's events and earnings you need to be aware of. Let's knock those out real quick so we can spend the rest of the show trying to focus as much as we can on a potential Gooning earnings play. We'll see if we're actually going to be able to do it today. But let me get rid of that screen. There we go. Okay. And let's close this entire tab out. Get that out of the way. And so what news do we got coming up tomorrow, Friday, or tonight that you need to be aware of? What earnings are coming out that you want to be aware of? What plays are there? Let's just get that done so we can move on to other possibilities. So tonight we have, let's see here, or after the market, obviously we got Google going on. And then really nothing else this evening to be that concerned about. We got this morning, tomorrow morning, we're going to have GE come out on General Electric. They'll be releasing that at 6:30. That's in the Dow, so just be aware of that if you trade the Dow early in the morning there. We're going to have the CAD Core CPI month over month. That's been a pretty flat trade for us consistently. We're looking for an 8 to 10 a.m. expiration for a $30 minimum profit on the trade. Looking on over at building permits as well from 8 to 10 a.m. on Eurodollar. For a $25 minimum take profit between 8 and 10 a.m. As well, be aware, though, one thing that could impact these, Yellen is going to be doing a little bit of a speech tomorrow morning. So let's look at the details on that speech that she's doing and make sure it is still scheduled. Looks like it is. She'll be talking, speaking at the Federal Reserve Bank of Boston's conference on inequality of business opportunity. That doesn't look like any kind of bomb drop right there. It looks more like a business thing and, quality, inequality issues. So hopefully you shouldn't really see much of anything out of that. It's not like a financial Fed conversation. So shouldn't be too big of a concern. Just be aware of it. We also got University of Michigan Consumer Sentiment Report coming out. Usually it has maybe a 10-minute impact on the market, and it's usually only a couple points. Not usually a big deal to look at there. It's only, it's a 5-minute report before expiration. We also got our regular, weekly crop bulletins and stuff that come out after the market. They'll more affect corn traders, soybean traders, wheat traders, etc., holding things into the next day. All right, that wraps up Friday for us. That gets us done with the news. Now let's check out where we're at on Google. And so I'm going to pull on Google. Google has moved on down below a deviation. It's pulling on back up right now. So trying to reach back up to settlement. Let's see how the NASDAQ is responding in course with that. Bring that on up. And it pulled down. It's broken above settlement already, showing some additional strength on top of it. With that, if we get too much more of a move, that is going to make it very difficult to find any binary contracts. Let me see what I need to do now. Just so I'll put Google off on the side, and we'll go ahead and pull up the NQ report over here. And let me adjust something. We'll get that going. All right, so again, Google earnings coming out today at 4 o'clock. We're going to look at the NASDAQ 100, the U.S. Tech 100 futures there. The U.S. Tech 100 is the Nadex options on that contract. So with Google being released, Google will release its earnings announcement at 4 o'clock. When Google moves, usually the NASDAQ moves pretty big as well, and we've seen some pretty big moves historically on Google. Sometimes they've happened at 4. Sometimes we got that move before that time. And so, when I'm starting to see the move, then I start to look at the potential best setup. We'll talk about that setup here in just a moment. All right, so we're looking at the NASDAQ 100. One of the lessons I gave you earlier was higher implied volatility pushes everything to the center. That is making this trade a little bit more difficult than normal. We're really going to have a pullback down, and still that IV is going to be pretty low. What I did was I went and I plotted the expected ranges here on NASDAQ. Again, Google's earnings are going to come out at 4 o'clock to look at what is the expected move. Now, I expect that we'll exceed the expected move simply because of the implied volatility being so high and earnings coming out. That combination has made this trade extremely difficult. Usually I go and I like to do some sort of, usually like one deviation or so strangle. And I'm looking at it right now, and just the first expected move, though I expect it to go lower, it is 37.52. That's sort of my safe number, you could say. And then my upper expected move is right around 37.96, or let's see, is that 37? Yeah, 96. So right on up here, but the highest contract I got is 37.88. And I want you to see, and this isn't necessarily a bad thing, it's just something that you really got to learn how to, handle, is, it pushes everything to the center. There's a lot more trades closer to $50 right now than normal, okay? So a lot of trades closer to 50 than normal. And when we have lower implied volatility, these trades, we could probably put this trade on right now for, about $30 probably, maybe 40 at most. Right now, though, we're looking at paying over $100. If either one expired, we wouldn't break even on the trade. If either one was, really makes a strangle, not possible with the higher implied volatility. This is a massively important lesson to learn. Now I'm going to go over and look at the spreads in a second and see if there's potentially anything else. But it's a really important lesson for you to learn. One, you have to have the 415s because Google earnings comes out at 4. You need 15 minutes for the market to move, so you can't use 4 o'clock expirations. So 4 o'clock, 4:15 is what you got, okay? But 2, to know it's just as important, to have a trade plan and know when to execute a trade, what trade you want to do. it's just as important to know when to not execute a trade, okay? And when the IV is this high, this trade is not going to work as well. This is a trade that's going to work really well on low IV. And, one of the things I talked about on the show yesterday is, I liken, different trading plans to, golf. And, it's nice to, have a putter for the, putting when you get up there on the green, but that doesn't do you any good when you're back trying to drive and make it go really far. We're going for a really far one. Well, we need some cheap out-of-the-money binaries, and we don't have them right now, okay? You're going to be putting up a lot more risk than you'd be comfortable with. What I like to do is I like to layer, okay? I like to go in and put, ones that are, really high probability and profit, and then I'll take profit on those quickly. And then I go in and use all the profit from those and use some really cheap out-of-the-money binaries to do it. In this case, we're looking to go in and putt, and all we got, we're looking to go in and drive, and all we got is a putter, or vice versa. So we got really high implied volatility. We don't have that golf and that bag in our golf club. And we're like, you know what? This is not going to be a good play right now. I'm in a sand wedge. I should not be pulling my putter out. I should not be dumping my driver out. If anything, I'm pulling my sand wedge out, and but I can't use my normal play where I'm at right here. I can't use my normal club. So we know that is currently out of the question, okay, to pull that trade off. So first, no strangle is currently available. Now, if the market, and I want to put this in there because, the market could, easily move down. IV could drop. I don't know, after the show's over. You can monitor it between now and 4 o'clock. If IV comes down, not likely. But if at least the market comes down, it might open up some strikes for you to look at, okay? And if that happens, then what I'll do is I'll reset my expected ranges over here, and I'll go in, and I have them right at 90 and 180 minutes. 90 minutes basically to offset it, so the 180 would be from where we're at now to expiration. And so I'll reset that. Maybe I'll reset it to, 60 or, 90 to 120 minutes or, whatever. But I'll play with the settings so I can look at the expected ranges to start what time it is to the end of the day to try to look for that potential safe, you may want to call it safe, not meaning that you won't lose money, just more probable of the price being hit price level. And then at that point, look and see what the binary prices are to see if a trade becomes available. All right, so we'll come back to binaries in a second because there is another potential play we could look at, but we'll come back to it, all right? All right, so now let's go over here, and let's go, all right, well, that isn't going to work. What about a straddle? So that's the next potential play. We got the market sitting right now right around 37.85. Is there a straddle? I don't think there's going to be one, but I'm going to check anyway, just in case. I'm going to put a 1-to-1. I'm going to put both directions. And really, I need one that expires at this moment, in a few hours, right? So I'm going to put 120 minutes just to get rid of all the intraday contracts. It'll narrow down my choices to show me just the 415s. So scanner making this a lot easier job versus I'd be hopping all over Nadex trying to find them and doing all the math for me. So for the 1-to-1 contracts, what do we got? We had a buy there for about $40, and that's pretty deep in the money already. So if the market continues to go up, that trade could be, fantastic. But we got to hedge this $40 profit over here. What do we got? Well, we got one way out here. That was us a big no-profit zone. That's not good. If I choose this one, by the way, working at a risk-reward graph. If the market goes up, what do you make? If the market goes down, what do you lose? So profit-loss, market going up, market going down. The shading that you might be able to see there, depending upon how it's coming through, that's going to be the live market, the underlying market there. We can't display the exact price, but I can give you a ballpark of its relation into where the spread is currently trading. Okay, so we got to sell right there. Problem is we still have this whole zone where we can lose money. We haven't made anything on this contract yet. That's going to make that really difficult. Okay, so what if we go a little deeper in the money? If we go a little deeper, we're getting a little closer. This isn't as bad. And sort of showing us, what our break-even range is right here. So we have to lose that amount and break a little bit higher. So what's the, risk on the trade? Basically $25. What that would mean is we need to move 25, points higher. And this is why I'm not a big fan of the NASDAQ 100, the US Tech 100 spreads on Nadex. I mean, everybody knows I'm a Nadex fan. But there are certain contracts I'm not as big of a fan of. We're talking about a 25-point move up just to break even on the trade. to break down and get to break even, we're basically going to have to move all the way down here to where we sold this contract, okay, down to 37.64, and we're going to have to make 42 points on top of that because these thinking things tick and points. And so let's look at just what would that be? Would that be a good idea? And some of this stuff I'm just rolling out as, not good ideas. But, I mean, we have had moves, I mean, just from today and just, since 10:30 alone. We'll just look at 10:30 here and bring it on up. Just what I have on the chart. We've had 93 points of movement. But if I have to move $40 to break even, what do I got to put up on the trade? I got to put up, $75 on the trade. Now, not all that's going to be lost because if it expired in the middle, then I'd still have some of the value on both sides. If it expired all the way down here, then I basically break even. But I could basically lose the max on one side or lose a little bit on both, probably around a $40 risk total on the entire position. So not bad. It's going to have to move up. Like I said, it's going to have to move 40 points lower than, and at 37.65, that's basically 60 points down before we break even. And then it's going to have to move up from here to cover 26 points up before we break even on the buy side. Not really sure that's going to be the wisest move on our part. So let me see what other possibilities. I'm just trying to look at any potential way to do trades that we might be able to pull off. Okay? So one of the potential trades we could look at would be, what if we inverted it? But we'd have to find a contract at the floor to do like an iron condor on it. Don't got one there. Not there. And what I mean is we need to find one that has a floor right near where the market is currently trading at. Go right here. Check this one. No, we basically don't have any spreads that are where the market's currently at. We're going to have the market come down to one of these middle price levels. Okay, when I say middle, I mean where the floor and the ceiling line up before we can even consider potentially doing an iron condor on the trade. So we don't really have any iron condors right there. Let me get rid of all of our filters to see if I see anything else that might work, but I don't really. We'd have to have like a trade really that's deep in the money, and those are only like $9, 10 points. That's not going to be enough to. That's too risky. Let's see here, and I don't really see even inverted break-even distances being that great. That's probably the best one, but it's still only 6 points of premium in the trade. So, with those combined, really not seeing a good straddle. I'm not seeing a good iron condor. I know it's a bummer, but it is, like I said, it's just as important to know what kind of trade you want to do as it is to know when a trade is not there. Okay, so there's really no trade I see on the spread. Usually I don't like the spreads on US Tech 100 for that reason. They're great to trade if you're brand new. If you want to risk $1 a point, you can really have some low volatility. You're not going to make a lot. You're not going to lose a lot, in normal trading environments. But for this specific trade, we're trying to do a breakout. They're not going to help us at all. So on the binaries, the only way we're going to be able to really pull a strangle off is if it comes down and implied volatility drops. It may come down, before 4 o'clock. I don't see IV dropping before 4 o'clock. Okay? So be aware of that. And then let's see here. I'm just trying to look at every possibility of what we got. The next thing I would look at is, let's see, we could look at one. You can just trade the chart because the market's moving up right now. You can buy in the money binaries and you can sell them. I understand they move a lot slower, okay, because they're pushed towards the center. Look at this 51.50. Even though the bid offer spread's not horribly wide, you are talking of a move of about 8 points before you're even at break even on that binary. Now, as time goes by, that price is going to move up, but you're not going to see near as fast of a move on the contract, okay? So what else could we do? Well, if you think it's going to come back down inside of a range, the only other possibility I see is going, hey, could I pull off some sort of trade? I mean, this one I can sell for 40. Can I buy this one for, 70 or, I mean, how low could I go? I might go 70, 76 all the way down here. And you could do like a binary, potentially, that's the only trade I see that might even be a potential trade. I'm not saying it's even a good idea. I'm just trying to look at all possibilities in the market at the moment. I'm not executing a trade at all right now regarding the specific strategy, just so you know. Don't want you following along and thinking I'm hitting buttons. But 37.88, you can sell it at 42. Say, hey, I think it's going to expire below 37.88, but above 37.52. Does that sound wise? Does that sound realistic? Well, again, let's look at our market expectations. And, it looks like, easily that could go up to 37.95. What about the close to close? It has to come back in it. 37.52 is going to be our settlement line. Granted, that's probably going to be if it does decide to move down, that's probably going to be a definite area of resistance. And we do have seen that retail sales have been lower and things like that. So they might be driving the market up to pull it back down when earnings comes out. But ultimately, it looks like you're going to have a really tough time pulling off anything besides a directional play for trying to do this normal strangle. It's going to be a very tough strangle, mainly because we couldn't even do a far out binary strangle if we wanted to, because there aren't any buy out of the money binaries. They're basically all like right there at the money. You see down here we have plenty of sell out of the money binaries, but they need to relist and post some upper ones so we can get some more contracts in there. Let's see here. Let me check one thing. Sometimes Nadex will add on contracts throughout the day, and they'll post it on their site whenever they do it. I don't know if they will this time, but that would be another thing I'm going to be watching for to see if, we might see here in an hour, they might add on 20 more contracts to the upside. Okay? And if you go over to nadex.com/notices, you'll actually see that sometimes when the markets move big like they have recently, that they'll go in, they added additional contract strikes. This is from on October 1st and October 2nd. They added in, additional strikes to the U.S. Tech 100. And you see other times where they've added in, other strikes on here. So they do add in strikes sometimes. When the markets are really volatile, they're allowed to add more on. So that would be probably my number one play, is looking to see if they add more strikes, if we can get out of the money. I'd be looking for probably a deviation move or so. I'd be looking to take profit if it does hit a deviation move, and I mean a deviation from where it's at 4 o'clock up or down. Would not be surprised to see, the NASDAQ pop an easy, 40 or 50 points. I've seen it move 150 points. I mean, it can go really wild. And it just depends upon how big of a shock we see inside Google earnings. Now, if it comes on back down, to 0.5 or settlement, then we ought to have some out of the money. So one of the two ways, there's potential for out of the money contracts that we can trade to do a strangle on it. So sorry, I was pretty excited. I was looking forward to a nice strangle trade on the air today. So hoping we were going to get that. But, if it's not there, I don't want to push it. All right, so it looks like the NASDAQ is starting to pull on back down a little bit. So we might get an opportunity later in the day. And also the later in the day, the cheaper those binaries can get, as there's less time until expiration. So unfortunately, we're going to have you check back on these yourself as we get closer and closer, just watching them, and as we get closer to expiration. There's still quite a bit in there. Let me go in and let me show you this. Let's see on the timer. And let's put those intradays back on there and look at them. And you can see they get a lot cheaper as you get closer to expiration, even with all the high IV. Okay, this one has 5 minutes, not the best example. This is an hour and 5 minutes. We're getting a little bit more realistic, like an hour out of actually having some ranges that we can play. Okay? So we need to look at those expected ranges when the time comes. Maybe check them an hour before expiration, 30 minutes before, not an hour before expiration, but check the 415s, I'd say at 3, at 3:30, and see if anything comes up that might be a good fit for a potential strangle. And like I said, my preference is to do as close as I can, make, say, net out, let's say I put in $30. If I want to make 15, then I got to make, 15 on one side plus the 15. So if I buy the 15, sell it at 45, that'll cover the $15 I lost on one, potentially may lose on one side unless it bounces, and I'll net a $15 profit. $15 doesn't sound that big, but then I'll take that 15 and I'll go out and I'll buy these cheap binary contracts. Okay, and so basically what I'm trying to do is do that high probability, low profit, but high probability strangle to pay for. That way, if my out of the monies never make it, I don't care. And to pay for that contract. And so if I can make $15 or $20, I can split that up between maybe a contract above, a contract below. And you may have to have a ratio. You may have to do two of the high probabilities for one of the low probabilities, to pull off a strangle on both sides. And depending on how big your account size is, how many contracts you can take on. And as it gets closer and closer, those get cheaper and cheaper and cheaper, as you can see right now. Just me showing you this. You're going to have to be in, I'd say, about at least 5 minutes before that announcement comes out, or things just get real volatile and weird. And you're going to need time to place all your orders and figure out what the money is that you can make, put in your take profits, put in the other orders. So give yourself at least 5 minutes, if not 10 or 15 minutes at a minimum. I'd probably be better to say 15 minutes at a minimum to get all your orders in and all your take profits in, because this thing can move. It may just go one direction, or it may fly up 50 or 70 points, may fly down 50, 70, 100 points from the high. So it can go really wild if you have take profits in. Sometimes you'll hit it on both sides. And obviously that can be, really beneficial. Flies up, flies down for you on that. Let's see what else we got that you might be able to do before it's up. We only got a couple minutes left. Let's just check out where we're at on the markets, and things come back down right now a little bit. We got the S&P just up 14 points now. Russell's up about 17, 18 points. We got NASDAQ just up 14. Like I said, moving on back. We got the Dow up a mere 60 points at the moment. Was down earlier this morning, ran on up, coming on back down. Copper is currently sitting up about 1%. Gold is still down a few dollars and closed on out there over in the pits, as well as silver and copper. Silver right now is down just a little bit more. We got oil is coming on back off those highs where it ran on up. Currently up just now $1.30, about 1%, back off from the $2 up it was. It was a massive move, just made that massive spike. And looking on over at our corn and soybeans, they're actually taking off, moving a little bit. We got a nice 1% move on both of those. And that really is your current market wrap, except for a few FX pairs, down 24 pips now versus being flat on your dollar. Starting to see a little volatility here in the afternoon hour, which is nice to see. And looking on over at the pound dollar, up 58 pips, euro pound down 49, with really volatile for the euro pound. Hope you all have a great day, and good luck on checking out those trades here a little bit later to see if anything pops on up. See y'all tomorrow on the Diagnostic Trading Hour.